Hi, and thanks for watching. Warren Buffett once said, "You only have to do a few things right in your life, so long as you don't do too many things wrong." He was talking about the traits of being a successful long-term investor, but the same also applies to being a successful long-term government. The mistakes that government make are generally more remembered than their achievements. With that in mind, this year's budget is shaping up to be a crucial one for the Turnbull government, who in recent months have been agonising over proposed changes to tax on superannuation and investment property, as well as facing declining public popularity. Today we'll provide you with an update on what's been proposed and what's likely to be in and out. Firstly, let's look at what's likely to be out. The government is understood to have now rejected the following. There'll be no new taxes on super contributions. There'll be no new taxes on retirement income streams from super accounts. Negative gearing benefits will not be restricted to newly constructed homes. Negative gearing losses will still be able to be used to reduce tax on employment income and not offset property income alone. And capital gains tax discounts will remain unchanged at 50%. They won't be reduced to 25% or even 40% as discussed. The government is trying to manoeuvre a tight balancing act between reducing the budget deficit while still minimising politically damaging tax changes given it's an election year. What is likely to be announced by the government as the changes are as follows. The amount of money that can be contributed into superannuation pre-tax. For those under the age of 50, the current pre-tax limit is $30,000 per year, and for those over the age of 50, the limit is $35,000 per year. This may be reduced to an annual limit of $20,000 for everyone. The current limit for people putting money into superannuation after tax, that is from your personal bank account into super, is currently $180,000 per year. However, this may be tightened to somewhere between $100,000 to $150,000 per year. Another policy to curb excessive negative gearing may be introduced by either limiting the number of properties a person can negatively gear or by setting up an annual limit of something like $50,000 on the maximum amount of negative gearing benefits a person can claim in their tax return. So what can we do to stay ahead of the proposed changes? Our tips are as follows. If you are thinking about putting extra money into superannuation with after-tax dollars, you should consider doing so before the budget is handed down on May 10. If you're retired, and if you're not drawing money out of an account-based pension, you should consider setting one up, as current income and capital gains are tax-free in this structure. Even if you don't need the money, starting a small super pension is likely to grandfather you against any future changes the government makes on taxation in super. If you're considering property investment, don't panic. The changes are likely to be mild in nature with regard to negative gearing and capital gains tax changes. We will be sending out an update after budget night, so please keep an eye out for that. But in the meantime, if you would like to discuss anything further we've covered in today's video, please feel free to contact us. From the team at financialadvisor.com.au, thanks for watching.